Who is FCC? Well, our About Us is really about you, the goals you want to reach, and the dreams you have. You're invested in your business, and as the only lender 100% invested in Canadian agriculture and food, so are we. Because a dream is just the start. It also needs a lender who understands where your dreams come from, where they can go, and what it takes to get there. If you want to start, grow, or transform your agriculture or food business, we can help. Because we're not just your lender. We're your champion, your catalyst, and we're behind you every step of the way. We are FCC. Dream. Grow. Thrive.
Hello, and welcome to our Inspiring Business Performance event. I want to welcome all of our Alliance partners here today. Those of you who are our partners on FCC's input financing, equipment financing, if you are one of our livestock partners, or those that work with us on our inventory finance. Today, we will spend the next 2+ hours talking about some of the trends and opportunities that we are currently seeing in the agriculture sector, as well as how to navigate change and inspire business performance. My name is Sarah Dobson, and I am the Senior Relationship Manager for FCC's Input Division within Alliances. I am based out of the Winnipeg office and have the privilege of managing our input program and working with many of our corporate partners, many of which have joined us here today. As we get started, I want to acknowledge that I am coming to you from Regina, Saskatchewan, which is on the ancestral and traditional homeland of the Anishinaabe, Cree, Saulteaux, Dakota, Nakota, and Lakota peoples, and on the homeland of the Métis Nation. This territory is referred to as Treaty 4 territory and continues to be home to diverse Indigenous peoples whom we recognize as contemporary stewards of the land and vital contributors of our society. This recognition is more than an acknowledgement of territory. This is about recognizing Indigenous peoples across Canada and to honor and respect the diversity and strength of all Indigenous peoples. My experience learning about our collective history, the significant contributions made to our country and culture by Indigenous peoples, and the wrongdoings committed against them have been a steep learning curve. I'm very thankful for the awareness and understanding provided today to my own children through our education system, as I have been able to learn alongside and cultivate conversations with them on such an important subject. I want to thank all of you for taking the time out of your busy schedules to join us today. Today's session will be recorded and a link will be available after the event if you wish to watch it again or share with colleagues who are unable to attend today. So our goal in hosting this event for our Alliance partners is to bring you relevant and timely information for your business and to express our gratitude for your partnership. Today is really about us giving you a really big thank you. I know it is an understatement to say this past year was challenging, whether we look at supply challenges in crop input products, equipment parts, or the feed availability and transportation concerns for livestock. We recognize your leadership, your grit, perseverance, and ability to adapt that you and your teammates have shown in supporting the agriculture industry and growers across Canada. We as FCC could not support this wonderful industry without your partnership. We also know that change and challenges are constant, and as we look forward to 2023, we hope to provide insight and tools to support conversations with your customers and help you navigate the business year ahead. We are eager to bring some dynamic energy to help you recharge your energy bank, and I am very excited to see how our vision for today translates into real value for you and your business. With that, we have a great agenda for you today. JP Gervais, FCC's Chief Economist, is here helping us to understand local and global perspectives and economic trends to help you uncover opportunities for your business. Inflation is rampant, but projections are for farm revenues to hit record highs amid a volatile economic environment. What should we expect in 2023 when it comes to commodity prices, farm revenues, interest rates, and global economic growth? I'm looking forward to JP helping us to answer some of those questions. We will also hear from tech titan Michelle Romanow. She is an engineer, a serial entrepreneur, and a dragon on CBC's hit show Dragon's Den. She was ranked in Women's Executive Network 100 Most Powerful in Canada and the only Canadian listed on Forbes Millennial on a Mission. Michelle will learn and share her lessons she has learned as one of Canada's most successful entrepreneurs, including the necessity of embracing change, encouraging disruption, and incentivizing innovation at every stage of the game. There will be a Q&A after each presentation. Since we are using Teams Live, you will not be able to put your microphone or camera on, so we are asking that you use the chat section on the right-hand side of the screen to ask questions. We have a producer who will be monitoring the chat for us, and we will get to as many as we can. So please open your chat box now. Keep it open. Ensure your window is maximized so you will have access to see the chat box. As a reminder, this event has been approved for the Certified Crop Advisor CEUs. By attending this event, you can earn 2 continuing education credits towards your CCA accreditation. You will have received an email this morning that included a QR code. Please use your Certified Crop Advisor app on your phone to scan the QR code and sign in. When we looked at developing our agenda today, we recognized that this past year has been full of change, challenges, and disruption. You skim some of our industry headlines, and it is easy to pick out some of the challenges that you faced this year. As equipment dealers, we know how you struggled to get new orders in on time, creating a snowball effect on the used equipment market. The availability of parts made it tough for you to service your farm customers in the manner that you were used to. Our livestock partners were challenged with feed concerns early in the year, border disruptions, and transportation challenges. And as for the crop input world, it was a balance between skyrocketing prices, availability of products, and Mother Nature always making sure she knew who was in charge. Although we did have a slow start this spring in some areas of Canada, we can thank her for giving us an open fall and allowing our growers to complete a very successful harvest. Amid these challenges, we also recognize how robust our agriculture industry is in Canada, how we need to take time to celebrate the year that we have had and look forward to the opportunities that working in this industry provides ourselves, our customers, and our businesses. We believe our 2 speakers are well positioned to share insights that will help strengthen your business, provide context and tools for tough decisions you may be facing, and to provide the framework for managing disruption and innovation. We are here to inspire you, to rejuvenate you, and to set you up for an interesting and successful year ahead. With that, I would like to introduce JP Gervais. He is our Vice President and Chief Economist at Farm Credit Canada. His insights help guide strategy and monitor risk throughout the corporation. In addition to acting as an FCC spokesperson on economic matters, JP provides commentary on the agri-food industry through videos and FCC's economics blog. Prior to joining FCC in 2010, JP was a professor of agricultural economics at North Carolina State University and Laval University. He is also a past president of the Canadian Agriculture Economics Society. JP earned his PhD in economics from Iowa State University in 1999. I welcome and present you JP Gervais.
Thank you, Sarah. Good afternoon, everybody. Thanks for joining us live. So those of you that are joining us live, thank you very much. We know how busy you are. I know how valuable your time is. So it really means a whole lot that you chose to spend a little bit of your time, a little bit of your day with us today. And so for those of you that are watching the recording of this, well, thank you as well. Thank you as well for joining in and tuning in and watching this recording. I really am excited today because this is a truly national event. We're doing this virtually. I'm in Regina today in our headquarters, but we have people joining in from coast to coast. So truly a national perspective here. And as excited as I am, it is also a little bit of a challenge. I got to tell you for sure, because you all have different, you have lots of similarities for sure across this great country of ours in terms of the business drivers. But I also know that there are some significant differences in terms of the markets you serve, in terms of the geography, and so forth, right? So bear with me. I'm going to try to highlight a few of those differences as we are going through this presentation. But obviously, I'm going to try to focus on the underlying trends that matter most and that I feel are quite similar across the different types of businesses you serve, as well as across the country. So really today, this is a typical economic outlook focusing or giving you a sneak peek at our 2023 economic outlook that we're going to be releasing in mid-January. So we're not yet ready to, we still have a whole lot to finalize in terms of projections and so forth. But really, I'm here today just to share everything that we have up to this point in terms of assumptions, projections for the industry that we use at FCC in setting our own objectives, helping out our customers navigate the environment and so forth. So really, it's all about sharing what we have in terms of projections. And if you feel like there's something that I'm not addressing, please, as Sarah mentioned, please drop your question in the chat box, and I'd be happy as well at the end to address what has been missing during the presentation. So really, this is just a sneak peek at what we're going to be focusing on in our economic outlook in 2023. Now, I kind of divided this presentation in three phases. The first one is providing you a big picture of what is going on in the economy. And really, I chose to highlight the number one topic in 2022, I would argue, and maybe likely even the number one topic in 2023, which is inflation. Inflation is very persistent, but I think this is a good piece of good news that we have is that we think that borrowing costs are going to plateau, and I'll tell you why in just a second. But before I do, let's look at inflationary or the patterns of inflation in Canada. The darker line there is overall inflation, and so the people on the call on the webinar today that are most optimistic will point out on the far right of the chart that inflation has been coming down for 3 consecutive months in Canada, and that's fair, right? But we have to understand what has actually been happening, and really inflation has been driven down slightly by lower gasoline prices that came off their peaks of the summers. And so at the end of the day, inflation's down, yes, but it really is almost entirely driven by lower gasoline prices. In fact, if you look at the products and services in the consumer, in the basket of goods and services that is used to compute the consumer price index and come up with the inflation figures, 2/3 of those product and services recorded inflation about 5% in the last month. So we're still looking at some very broad inflationary pressures. The piece of good news for those 65% of products and services that are still showing a lot of inflation is that the inflation still seems to have stabilized, and so not growing. But before we see this coming down in any significant way, this is going to take a little bit of time. So that's going to drive some of the commentary that I'm going to offer around interest rates in just a second. But before I do, I want to point out as well food inflation pressures. Actually, if you look at food inflation, this is for all food, so purchased from restaurants and grocery stores alike, and it's at 10.3%. It's showing no signs of abating. Actually, if you focus on just food purchased at the grocery stores, the inflation rate's closer to 11%. So it is really something to see that inflation in the agri-food supply chain is not coming down. And if you look at the retail level, and I'm going to work my way back upstream all the way to farm inputs, but if you look at retail first, you see that those inflationary pressures are really broad-based, right? It's wherever you look. depending on not independently of the type of products, whether it's animal proteins, plant-based proteins, and so forth. Inflation is really broad. There might be, a commodity, a product that is showing a few signs of inflation. Pork is one of those right now, but don't forget that this is just a 1 month type of an observation, right? So it's looking at year over year for the month of September. October data points are going to be released this week. And it's pork hasn't always been like this, right? So there's been inflationary pressures even for pork meat. So bottom line is that those pressures are widespread in the food supply chain, not showing any signs of slowing down. When it comes to the overall economy, we are starting to see finally the impacts of the increases in the Bank of Canada rates that are channeled through the entire economy. So on the next slide, and I'm just going to, here you are. So on this next slide here, what you're seeing is an average of borrowing costs in Canada. So this is not just statistics that apply to the agri-food industry. This is a statistic from the Bank of Canada. So it's looking at the entire economy, borrowing costs on average for businesses. So it includes short-term rates, fixed rates, variable rates, long-term, all those type of things aggregated, and you come up with an average. And what you realize is that if you look at where we are now, close to 6% in terms of average borrowing costs, and where we were at the beginning of the year, we basically saw borrowing costs go up by 3.5%, which is exactly the increase overall in the Bank of Canada rate that we've had in 2022. We started the year, with increases in that, 50 basis point range. We had a major shock of a 1% increase in the Bank of Canada rate in July. And now we are starting to see the increases of the Bank of Canada coming down slightly, right? So the last increase was one of 50 basis point. So now going forward, the expectation is in December, we're working with the assumption at FCC that the Bank of Canada is going to lift its overnight rate by 25 basis point, right? 0.25%. If you look at market expectations right now, it's pretty much on the fence here. So, it's really just a coin flip between, yes, going with one increase in December of 25 basis point, or going with another increase of 50 basis point, right? So we think we're going to get 25 basis points, 0.25%, but I would not be surprised to see another one of 0.5%. It might be that we get one 25 basis point increase in December and get another 25 basis point increase in January. So expect 25 to 50 basis point more in the overnight rate of the Bank of Canada between now and the end of January. But then we think that we're done in this tightening cycle, that the bank is going to pause and wait and see and look at what is actually going to happen with regards to inflation. So that behavior that I just described, the pause after lifting the overnight rate by either 25 or 50 basis point, that behavior is already baked in the financial markets. It's already priced in, right? So what we're seeing in terms of average borrowing costs reflect market expectations of what financial markets expect the Bank of Canada to do. So indeed, if there is no more increase in the overnight rate, that means that we should see borrowing costs overall plateau for a while. Now, the interesting question I feel is, for how long should we expect the Bank of Canada rate to stay where it is? And I've had lots of questions recently about the likelihood of a recession in Canada. And on the follow-up is really, well, if there is a recession, then what are we going to see, or what should we expect the Bank of Canada to do? And the expectation being that if there is a recession, then it would be only fair to see the Bank of Canada cut the overnight rate by some percentage points, right? And I get the argument. I totally get it. I do think that there will be an economic slowdown in Canada in Q1 and Q2 of 2023. Whether or not we're in technically we see a recession, I don't think this is really an interesting question, frankly. I think this is a question that only folks like myself should be interested in, because at the end of the day, the slowdown is going to be felt. There will be a slowdown. Whether or not, like I said, it's a technical recession doesn't really matter, because at the end of the day, the labor market's really strong. So if it is technically a recession, it's not going to be like anything we've seen in the past. So that means that, hey, we have to think a little bit differently about the next 12 months. So that's one thing. But there will be a slowdown. And as a result, you could expect the bank to lower its overnight rate. But I don't think it will happen until 12 months from now. So really look to see the bank provide a little bit of relief in the economy towards the end of 2023. Now, it could happen a little bit sooner if the economic slowdown is really big. But if it is, as expected, something that's a bit smaller in magnitude, that the labor markets are not too affected, in the latest job report that we got showed tremendous job gains across the country. So at the end of the day, I'm not so sure that to expect the Bank of Canada to lower its overnight rate is the right thing to do, or is the right thing to expect. I do think that the bank's going to be steadfast in its desire to bring down inflation, and that's going to take some time to see inflation coming down sustainably. And that's, we're going to have to wait for a little bit of time, and so I do not expect any type of relief when it comes to the Bank of Canada rate for another 12 months. As I said, the only wild card being that if there is an economic slowdown of magnitude that is larger than what we currently expect. So having said that, it does create a few issues to look at, for businesses that are looking at, renewing some loans and so forth, because right now, with the expectation that the bank's not going to lower its overnight rate for the next 12 months or so, we're seeing 5-year rates, 10-year rates in the financial markets for bonds coming down slightly. So the yield curve, for those of you that are familiar with the concept of interest rate for different maturities when it comes to the bonds and financial markets, so that yield curve is still upward sloping up to a year. And it's really just after that, that second year and beyond that we're seeing a little bit of a downward sloping yield curve. So yes, we have right now 5-year mortgage rates that are lower than what they've been recently, maybe in the last couple of months. But are they expected to come down even more? Not if the bank keeps its overnight rate where it's at. Only if the bank provides a little bit more relief in terms of interest rates, then we should see longer term interest rates come down. But I do expect to live in a sort of a plateau type of environment for a foreseeable future until we get a little bit more of a sense of what's going to happen in the economy. But that's the assumptions that we're working with right now. Another 25 to 50 basis point increase in the overnight rate, and then borrowing costs overall plateauing for most of 2023. Okay, I just need to reload my clicker here to advance the slides. I'm going to do that real quick here. And so one of the things that I did mention is that, the economic outlook might change, right? And so what do we see now that could be a little bit of a difference? The labor market is one of those critical factors to monitor, right? So on the left-hand side here of the screen, you have a bunch different indicators for the labor market. I don't mean to go in details in each of the indicators. The bottom line is that most of the indicators speak to a very tight labor market, right? And they're very close to their historical highs or historical records when it comes to tightness of the labor market. And when they're not, there's a good explanation behind the fact that they're not. So overall, labor market remains really tight. On the right-hand side, you have the overall national pace of increase in hourly wages in Canada. And that rate of increase is slightly moving up, trending up lately at 5.6%. Not too long ago, it was right around 5.2. It used to be 4.5. And so you see that that trend's accelerating a little bit. The market is really tight. It's a really, really strong demand for labor. And that creates all sorts of different issues for businesses. And one of those issues that I want to point out is job vacancies, right? So what I'm trying to do here is, if you focus on the dark line there, that's the job vacancy rate for the entire economy in Canada, right? So it's all industries in Canada. That's reflected by the dark black line there. And you can see that this job vacancy rate actually went up. Now, some of you might say, well, this line's not moving up that much, JP. Well, no, I get it, but it went from 3% as a job vacancy rate before the pandemic to now around 6%. So it basically doubled, right? So that's a big deal, right? So, and I know all businesses on this call understand this, right? That it's really the labor market is nothing like we've had in the past. And it's quite something to also highlight that all of the other lines which reflect job vacancy rate of an industry as part of the agri-food supply chain, all of those lines are actually above the black line, right? Which is sort of the average for the entire economy. So in the agri-food supply chain, we're facing more acute labor shortages than elsewhere in the economy. And I do think that's one of the challenges that we have to address. There are a number of different reasons, factors that explain this, right? I mean, the geography of where production's taken place and all of those type of things. But I think this is one of the challenges that we have in front of us that we're going to need to address. In fact, if I can plug in one of the studies that we did not too long ago, we released this about 5 or 6 weeks ago, and it's available on the website. So if you go to fcc.ca, go to knowledge economics, you'll be able to find it if you go back 4, 5, 6 weeks ago. And it was really just making some projections for 10 years and looking at what is the 10-year trend when it comes to job vacancy rates, right? Because this highlights the supply of available labor compared relative to the labor that's demanded by businesses, right? That businesses are looking to hire. So if you make some assumptions, I said, about the growth in ag production and food production, if you make some assumptions about the rate of growth of Canadian population based on some trends in immigration, as well as the natural rate of growth of population and so forth, right? You can come up with a number of different scenarios. And the best case scenario when it comes to job vacancy rates for industry attached to the agri-food industry, the best case scenario is basically the status quo. In a lot of different cases, if immigration is not as robust as we think it will be, or, name a reason, most different scenarios would actually speak to an even higher vacancy rate for some of the industries in the agri-food supply chain. So really, I do think it's a big challenge for the next 10 years. It's one that's not going to go away. And I think we need, as an industry, we need to have a strategy. And as a business, obviously need a strategy as well to manage to automate as much as we can, as well train retail employees that we need to be successful. So that's one source of inflation when you look at patterns or the tightness and pressures in the labor market. Another source of inflation is related to supply chains, and certainly in your sector, this is certainly an issue that you know very well. Sarah alluded to that as well at the very beginning of the presentation. The bottom line is, overall, supply chains are improving. There's more work that remains to be done. So, and I'm trying to illustrate this with 2 charts here. So I'm going to start on the right-hand side, right? This is an index of global supply chains. What it does basically is the higher is the line, the more pressure is there on global supply chains. And if you're going back to 0, and so you see on the very far right of the screen, that line is trending towards 0, which would mean that in terms of pressure on supply chains, you're back to average, right? So you can see that at the height of the pandemic, it went up, then, it's sort of reset a little bit, but those supply chain pressures actually went up again in 2021, remained high in early 2022, and started to decline. So really globally, this index that accounts for transportation costs, it accounts for a number of different indices that are all aggregated together to come up with one single measure, right? So there's a lot of aggregation into it, right? But if you just want to go back, thank you. So things are improving, no doubt. Things are improving globally, right? But if you focus on the far left, now, if you focus on the left-hand side chart, then this is where you see that things are not necessarily improving within our borders, right? So this is survey-based. So this is 2 different kinds of surveys that are run by the Bank of Canada. And another trade association. And really what it points out is that businesses in Canada still have a hard time sourcing the inputs that they need from abroad or domestically. So really, supply chains domestically are still struggling, right? And this is what this chart on the left-hand side is saying. So globally, I do think that things are improving. Domestically, it's going to require more time. And especially when it comes to, if you look at farm equipment, it's going to take time to bring those supply chains back to where they were prior to the pandemic. And I'm afraid that if we do get, I think one worry that I have is that if we do get a global economic slowdown of some magnitude, if there's just a little bit of a slowdown, which, I fully expect there will be a slowdown globally. But if there is more of a slowdown, if there is a bit of a snowball effect, right? Higher rates in a lot of countries are leading to lower consumer spending, lower exports. And so some countries that might, relying on the strength of their exports to drive their own economy. China is one of those examples, then it might suffer a bit more, right? So I'm afraid that if we have a major global economic shock, that those supply chains are gonna lose some of the gains that they made, and then businesses are going to scale back a lot of the capacity investments that they made to make sure that they can withstand any type of significant global recession, right? So I think that's one of the worries. I think things are trending in the right direction, but I do think that there is a lot more work to be done when it comes to supply chain. And just before I get to the next point, and one last issue, right? I do think that one of the sources of inflation that we've had in this country that is pretty much done now is the issue of savings, right? We accumulated as consumers and households in Canada a lot of savings during the pandemic. And if you look at the saving rate, there's a little bit of a lag in between where we are now and when the data is available. But we estimate that we're pretty much very close, or will be at the end of the year, really close to where we were prior to the pandemic. So that saving has pretty much been depleted now. And if it's not already depleted, then will be depleted by the end of the year, very early 2023. So that source of inflation is going to go away, basically, has already almost gone away. And so really we're stuck with, overall commodity prices, overall supply chain issues, labor issues and all that driving some of the inflationary pressures that we have. And we just need a little bit of time for our businesses to fall back on their feet and get back to an environment where there's a little bit more stability when it comes to the prices that they face. Okay, so now want to shift the focus of the presentation towards the agri-food supply chain. So I'm going to focus on ag commodity prices for a while here, and just to discuss some of the trends that we're seeing in terms of commodity prices. Now, at the end of the day, it's all about supply and demand, really. Yes, if you're a trader and you're trading a market, of course, those fluctuations, they don't always short-term within a day make sense with what you know about supply and demand. But in the long term, it's all about supply and demand. And there are lots of different factors that explain some of the trends in commodity prices, right? So what I have for you on the screen here is on the left-hand side, a chart of the U.S. corn market. So that's the reference price for us. On the right-hand side, U.S. wheat market. If I start with wheat, which I find interesting, right? Obviously, a big disruptor there has been the war in Ukraine. And the agreement in July, and you can see that wheat prices started to get back towards more of a normal type of level sometime in early summer. The agreement that was between Russia, Ukraine, Turkey, and the United Nations for safe passage of grains out of Ukraine. It's actually done a lot of good in markets in terms of stabilizing markets, as well as solving some of food security concerns that the world had. And you can see that wheat prices decline. And then this latest hiccup, I'm not sure if that's the proper word there or the right choice of word, but this latest disagreement, temporary disagreement on the existing agreement is actually, had a bit of an impact in the marketplace, right? But I remember when it was announced that Russia was pulling out of the deal, I don't know how many calls we had from media about wanting us to comment on this. And I did say as well, markets are reacting strongly today, but if we put things in perspective, right, this little peak that we see there, that's based off the announcement that Russia was going to exit the deal, right? So if you put things in perspective, it was a far cry from the price, the reactions we had in the marketplace to begin with, early in the war, and as well throughout, most of the spring. So, and then Russia's back on, and now there are reports this morning from Bloomberg that Russia will sign off on extending the deal by another 4 months at least. So this should provide a little bit of stability in the marketplace. Corn is trending up, and I do think that it's not just, so sometimes we forget as well that Ukraine's the 4th largest corn exporter, right, in the world. But the bottom line is that if you put aside all those talks and discussions around the war, the volatility, the underlying fundamentals in the marketplace is that we have a tight balance between supply and demand, right? And my most favorite statistic to summarize, all that's going on in the marketplace are this black line there in each of the market, whether it's the world wheat market or the U.S. wheat market that is our reference market, or corn in the U.S. or globally. That dark line there points to a tight balance between supply and demand. So that stock to use ratio, maybe not in an all-time low, because if you go back more than the years you see up on the screen, obviously you'll find situations in which we were in a tighter spot. But the idea is that with some of the supply challenges that we had, in Europe and other places in the world, if you're corn, for example, well, that's 20% decline, a 20% decline in corn production in Europe, and even if you lower the estimate of usage in the world, which is exactly what you see in the top northeast corner of the slide, fact is that ratio remains really tight. So all in all, I do think that in 2022-23 marketing year, we're going to see commodity prices remain elevated. I do think that demand is this strong and supply is really tight. Now, there's one wild card, and a wild card again being a global economic recession of some magnitude, right? I can't sit here and tell you, watch for economic growth be lower than X%. But if we do have significant slowdowns in parts of the world that are major importers of commodity, and then China comes to mind, obviously, right? So China, out of every dollar of income consumers have, 30 cents of that dollar is spent on food. So if you lower income by a significant amount, that means that there will be less spent on food. It's a totally different situation than in Canada, for example, where we are very fortunate to be able to eat as much as we want. Yes, we have food security issues in Canada. I don't want to minimize the issue, that's for sure. But by and large, we're very fortunate to have access to an affordable and high quality source of supply when it comes to food. So bottom line is, I think, it's hard to see a scenario for me that would bring commodity prices lower than last year or even lower than the 5-year average, other than a major economic slowdown in 2023, which, again, as I said, I don't think is likely, but nonetheless remains a possibility. I want to say a quick word about oil seeds. If you look at the soy market, very strong U.S. market, canola is in a bit of its own world out there in terms of what's going on in the canola market. There's a bit of disagreement on the size of the crop here in Canada, and I don't know if that's what really influences the market. I'm kind of suspicious that it is, but I'm not even sure that it should be a factor, frankly. But there are some disagreements about the size of the crop, let's put it this way, among different agencies, and so we'll see what kind of crop we get when it's all tabulated and computations are finalized. But at the end of the day, I do think that the demand for oil seeds is very, very strong. And this is, I would say, my favorite chart of all, because if you look at the pattern between soy oil as well as soybeans and soy meal, then you can clearly see that the market for soybeans is driven by soybean oil. So vegetable oil is really driving the market here. And obviously it's a function of all those very aggressive mandates for biodiesel, renewable diesel that have been set in the marketplace. It's quite clear now that because of different challenges when it comes to either infrastructure, when it comes to transportation, and some are producing kind of palm oil is not going to be a solution here. And so whether it's because of environmental challenges, because of transportation infrastructure, and so the demand for vegetable oil is really, really strong, and I do expect it to remain strong for the foreseeable future, and that drives a lot of the market right now. And I think that's a source, again, of that strength in demand. And even if we have a global economic slowdown of some magnitude, I'm not so sure that this market would see as much of an impact as other commodity markets. A quick word on livestock. If I can flip to the next slide. This is the reference markets for fed cattle in the US and hogs in the US. I think herd size is going to be supportive of livestock prices, even if we have a major slowdown, right? So I kept talking about a global economic slowdown. We'll have some kind of slowdown as well domestically here, and red meat it's always been one of the sectors that's a bit sensitive to economic fluctuations, right? If that happens, I still see demand for red meat very strong right now, very robust. And size of herds in the US actually are quite supportive of, if you look at production or anticipated or expected projections for production in the US, coming from the USDA, I think that's quite supportive of livestock prices that remain high. So for me, it's not necessarily a major concern in terms of, the possible impact of an economic slowdown, but something to keep in mind for sure if you were to see prospects of increasing production coming from the US, for example. But I just don't know that this is the case right now. And the demand coming from China is another big driver, right? Especially for pork, obviously, but for beef as well. And if indeed there is a global economic slowdown, then perhaps on the export side of things, maybe this is where we should see something that might be weakening prices that we face in our markets. If I look at farm cash receipts, and so there's a little bit of a label here missing, which is that this is just for grains, oilseeds, and pulses at the national level, right? So keep that in mind. This is for field crops in Canada. And so what we do here is those dotted lines are projections. Now, so we have 2020 actual receipts, so 2021 actual receipts as well, that black line and gray line. The blue line is the projection that we had at the beginning of the year. So if you trace it all the way back on the left-hand side to the beginning of the year, and as the markets were moving, we were getting information about production in various parts of the world and so forth, right? You put all of this together and you come up with a forecast that evolves in time, right? So obviously when we had the war that started, prices reacted strongly. So the forecast for receipts, because of this higher movement in prices, actually went up. And so this is why you see the blue line gaining a little bit of momentum. Now, obviously 22 receipts are a function of 21 production and 22 production. So this is why you see that, you don't see, but you would see, if I were to break this down, the forecast for Western Canada versus Eastern Canada, I'm getting at the national level right now a projected increase in cash receipts for field crops of 15.3% in 2022 relative to 2021. If I were to break down the 15% between Western Canada and Eastern Canada, in Eastern Canada, we would have a bigger increase than 15%, and in Western Canada, a smaller increase than 15%, because again, 22 receipts are both function of 21 production and the 22 crop as well, which was obviously not great in 2022 in Western Canada, right? So, but you get the point that with a better crop in 22 in Western Canada, then that influences receipts in 2023. So you see our projection for 2023, which we started computing in August, is showing sizable increase of 16% at the national level when it comes to the field crops, right? So the bottom line is that from a gross income standpoint, we have projections that are fairly optimistic, right? That we have 15% growth, more in Eastern Canada and Western Canada, but then the story would be flipped the other way around when you look at 2023. And so have a bigger increase in Western Canada of 16% projected for 2023 receipts, and a lower projection for Eastern Canada. So this is all confusing perhaps, but the bottom line is that, hey, gross income is going to climb. And I think it's a good thing knowing what we know about inputs, right? So let's talk about profitability, because I do think that's one of the drivers of the investments that's made on Canadian farms, right? The idea that, hey, if we're able to generate positive margins on a sustainable basis, I think that's conducive to more investment. So I just told you that gross income, and I just spoke of field crops, but if you look at livestock, if you look at supply managed sectors, if you look at different sectors, it's hard to find sectors that are not showing any type of upward projection, upward movement in gross income. Now, the story is all about input costs, right? So, and there are some pressures. You know, I don't want to dismiss this. From a farm standpoint, yes, inputs are going up, and that puts a bit of pressure on margins. So I just wanted to illustrate some of those input prices that have been going up, right? So again, at the national level, those price increases might be different depending on where you are and so forth, right? But not all inputs are the same. I mean, there are some inputs in labor. I talked about labor at the beginning of the presentation that has seen some upward pressure as well. But fertilizer, fuel, feed, all inputs that have shown considerable growth, you know, in the last couple of years. If you go back to what it was prior to the pandemic at the beginning of 2019, even some stability going into 2020. And we've seen the increase that we've had over the last year, 12 months to 18 months. So when you put all of that together by sector, you get a little bit of a different picture, but a picture that I find is by sector that is, I would say, even consistent throughout the different sectors, right? So if you start off, you know, with a dairy cost production index, right? We've had, you know, over 2 years, depending on where you start to compute everything, we've had roughly a growth of 22%. In the cost of production over the last 2 years. When you look at cost of production for hogs, it went up about 33% relative to 2020. And of course, this index calibrated based off a farm in Ontario, but I would argue that the trend, even if the cost of production might be different, the trend might look a bit similar, if even maybe just a little bit more of an increase in Western Canada due to the shortage of feed. Overall in the prairies. If you look at production costs for field crops, this is where you find a little bit of difference. Ideally, you'd like to put those cost of production indices independent of production, but the increase that is larger in Saskatchewan than it is in Ontario is driven partly by the poor crop in 2022, right? So, but the bottom line is that we have a 50% increase in cost of production over 2020, 37% in Ontario. So the bottom line is that those stats, if you take a little bit of a longer term perspective and not just focus on the previous year, but from a farm operation standpoint, if you take a 2 or 3 year perspective, the increase in costs is really matched up okay with the increase in gross income, right? So at the end of the day, I do think by and large, on average, aside from some of the production challenges that we've had in the prairies in 2022, which were quite significant, I think for the most part, farms are managed to find some positive margins here. But of course, there are lots of different situations. No farms are alike, no operations alike. So there are different situations, obviously, depending on where you are located. So that brings me to the so what of this presentation, really. And on the next slide, what we have here is I borrowed, and please, I think I need to be clear about, make a kind of a disclaimer, so to speak, in terms of please do not see these numbers as numbers you need to put within a business plan. This is just for illustrative purposes. There's just a unique objective behind this is to highlight the importance of benchmarking your operation against your peers, right? So I took FCC not too long ago, started to provide benchmarking tools to customers. So we started out with dairy. We now have grains and oilseeds built. And so we're looking to roll this out a little bit more at scale now that we have those tools available. And really what this does is it allows operations to say, all right, for an operation my size, my area, where do I fit when I look at income, margin, liabilities, amortization, right? Those type of things that from a financial standpoint can help me make some good decisions, as well as from a business standpoint. Because if I look at my gross margin and I'm only middle of the pack, I know that, yeah, there's tons of things that go into a number like this, right? And there are tons of different things. But I think it's a first step towards diagnosis here, saying, hey, yeah, I'm just middle of the pack when it comes to efficiency here. How can I work with my partners? And I do think this is where farm input suppliers, retailers, and so forth really have a big role here in terms of helping out farm operations becoming more efficient. And there's room for efficiency. And this is not having delivered it myself, this is not necessarily a message that's easy to hear for an operation, right? Because, maybe some farms made some really large investments in terms of equipment, buying land, whatnot. And now all of a sudden they're looking at where they're at and it's like, oh my God, I still have some room to improve. And I do think that everything's a matter of perspective, right? I think on the flip side, I think I would see this as a positive, right? There's room for improvement. How can I have that can I have that CEO mindset and say, how can I surround myself with the partners that are going to help me reach that next stage, right? And I do think it's whether, if it's a livestock operation working with on feed efficiency, agronomics when it comes to crops, whatever the story is, there is a story for most businesses in terms of making the changes within their operation to gain some efficiencies. And really, at the end of the day, we can look at the environment and all acknowledge that this is a really complex environment, really highly volatile, and that's going to likely remain the case for 2023. The only thing that we control really is the efficiency within our own operation, right? So I think that's the purpose of this, is to say, all right, this is where I'm at. I got some room to grow here, and I can benchmark myself against similar type of operations and get a sense of what I need to do. And on the financial side of things, right? This is always, it's not necessarily interesting to say, right, who's carrying more debt and so forth, but it's really about like who has different types of financial risk management plans in place, right? So, and again, sitting down with your lender, I do think is a good way to start a conversation. And really, I think this efficiency story is really tied to one of the most critical things for Canadian ag in the next 5 years, and that's productivity, right? I mentioned the labor challenges. I mentioned a number of different challenges when it comes to supply chains. The one good thing we have going for us is that the demand for food we grow is really, really robust, and I expect it to remain the case. But when you look at our productivity in Canadian ag, if you look at, when you look at productivity measures, especially in agriculture, you need to look at long periods of time, right? Because you want to abstract from years where weather was really poor, and that's kind of skewed the numbers one way or the other, right? So you look at 10-year time frames, and so if you look at the last 10 years, on average, productivity growth in Canadian ag went up 1% a year. So on average, for 10 years, 1% a year. That's for the last 10 years. The 10 years prior to that, productivity, at the top of my head, I can't recall the exact number, but was between 1.5 and 2% on an annual basis. And the 10 years prior to that, we were at 2.5. So you get the story here, right? So there's a trend of, hey, we're still growing our productivity. We are more productive, which is the good thing, but we're doing so at a declining rate, right? At a slower pace. And I think that's the challenge, right? If we can gain back some of those percentage points in terms of productivity, and maybe not revert way back to where we were 30 years ago, but if we can revert back 10 years and say, hey, what are the innovations that we need? What are the major advancements that we need as an industry to really launch into making sure that we're productive and growing our business again? I think that's the number one challenge for the industry right now, is in terms of sustainability when it comes to financial and economic sustainability. So I look at time. I'm going to turn it over back to you, Sarah. We got, I do think, maybe close to 20 minutes for Q&A if we have some questions in the chat box. So.
Perfect. Well, everybody out there, please start typing them in and we'll get JP to help us answer those. We did already have some come in, and this was a question related to the Companies Creditor Arrangement Act. Do we see or forecast an increase in the use of this act or bankruptcies over the next year? When we look at the overall, challenges within our economic businesses in Canada, not necessarily just the agriculture sector, I'm assuming.
Okay, I was going to ask, because I think that's an important distinction for sure. Yes, I do think that I think we need to set ourselves up for a bit of a tough time when it comes to bankruptcies. I think we do have Canadian consumers that have carried a lot of debt, and looking at averages is a bit misleading when you're trying to paint a picture of what should we expect in terms of challenges like bankruptcies and so forth, right? So and from a business standpoint, I do think that there are some small businesses that are probably going to find it really hard over the next 12 months. So I do think that we have to brace ourselves. So a little bit of turbulence there for sure. I think the piece of good news, from an industry standpoint, if you look at our own industry, we're if you look at FCC's portfolio, I think things have not moved the way that we label them. They've not moved, right? So the businesses that were tight prior to this inflationary environment that we've had for the last 12 months, things have not moved in the sense that businesses that were in a precarious position are still in a precarious position. The businesses that were not are not. And so we've not seen, this major shift in terms of the financial risk and outlook for the industry that one would expect. And not too long ago, maybe a couple of months now, actually, we ran simulations for the industry. And at the time, it actually dates back 4 or 5 months now, but it's available on the website. And we were looking at financial risk for the industry and looking at some different scenarios, because at the time, remember 4 or 5 months ago, we were not even in July where we had this major shock of 1% increase in the Bank of Canada rate, right? And so at the time, we had our worst case scenario, which was 6% of average borrowing costs. This is exactly where we're at. So in a sense, from this scenario planning, our worst case came to fruition, or came through, in a sense that we went and saw that average borrowing costs went up all the way to 6%. And under those assumptions, or under this assumption, and some other assumptions with respect to farm income and so forth, we were looking at financial ratios like interest coverage ratios and debt repayment capacity ratios and so forth. And those ratios were back to where we were in the years 2000 to 2010. So, and those years were not necessarily critical in terms of, financial risk for when it comes to Canadian ag. So I'm fairly confident that we're going to be able to withstand as an industry in the ag and food business, withstand the current environment in terms of inflationary pressures and higher rates.
Okay, perfect. Thank you for that. Another question. When we look at both labor challenges and supply, something that continues to be recurring and impacts a lot of the different sectors in agriculture is that truck transportation market. And we saw that it was one of the areas with the biggest labor challenges or job vacancies. Is that a reflection of the cost of fuel and owner operators, or is that employees left during some of the COVID challenges, if we want to call it that, and we just haven't seen a resurgence? And what do we think what do we need to see happen to get that back, because it's such a critical piece of supporting our sectors?
I'm glad it has been brought up because really, when you look at transportation, this is so under the radar. When it comes to this, is something that we take for granted in some ways, and this is so under the radar when it comes to investment, the investments that are needed, right? If you look at our port infrastructure, our rail infrastructure, and so forth, right? So, and trucking is one of those things where, in terms of so the costs have been moving up. I think part of it was fuel, but part of it as well as the labor challenges, because as you pointed out in that chart around job vacancy rates, I mean, that's the industry that is experiencing quite a bit, some significant pressures, right? And so as a result, that wage growth that I was pointing out on average is much higher in the trucking industry, just to make sure that we're finding, bring people to work and so forth. So that's one of the challenges in terms of like where are drivers gone and so forth, right? I think there's no single answer. As much as I would like to point out one factor that explains most of it, it's just not the case, right? So if you look at participation rate, that means workers that are actively seeking to work, we're a little bit below where we were prior to the pandemic, but we're not that different. So it explains part of it. The issue with part-time work versus full-time work, and there's more part-time work, so that explains that, yes, we have more, as many people employed doing fewer hours, and so that sort of leaves as well a little bit to offset or compensate in some ways, right? So it's just those little things that all add up to where we are currently. And I do think that as much as we like to talk about the new normal, and I do think it's one of those areas where when you think of the labor market, I don't know what the new normal is going to look like, but the labor market's not going to go back to what it was. Population continues to age. We're going to lean on immigration to fill some of those jobs. So immigration opens up a lot of the other questions as well in terms of, the decisions to locate within Canada, where in service to which industries and so forth. So it just opens up lots of different questions, right? So I think we're just seeing the markets evolve right now in front of our eyes, and so that's the reason why I expect that this is going to be definitely a challenge going forward.
Next question is both related to the Canadian economy as well as China. When I think about some of the talks we heard FCC provide over the last year, there was context in terms of how big of a partner China is in the global landscape, how much they are important to our supply chain, how they had a zero COVID policy. As we start getting into the fall, we start going through a fall flu season. How important is it going to be for the Canadian economy to ensure that we remain open to mitigate our recession concerns, as well as what do we expect China to potentially do in terms of some of their health policies, if anything?
Yeah, things. So I think it's it's a mixed story there, right? So I was going to say glass half full, half empty. I mean, in the sense that there are lots of different indicators that are not painting a really good picture for China when it comes to their economy, right? So if you look at their zero COVID policy. If you look at one data point that I keep looking at is the Purchasing Manager Index, which looks at businesses and how much they are purchasing in terms of inputs in the manufacturing sector, because that gives you a little bit of a lead indicator as to what to expect. If businesses are purchasing more, that means that they're expecting strong demand, and so are building up their production lines and so forth, in their capacity. So all of that together, that's one of the things that I'm looking at. And actually the indicator for China has been slowing down, right? So zero COVID doesn't really help. The real estate market is not doing well. So that's another area of concern. Consumers have stopped borrowing. And consumer spending has been slowing down a little bit, although consumer spending in China is not the major driver. Export markets are. But if we have our own slowdown, and so our own demand for Chinese exports and the US demand for Chinese exports and European demand for Chinese exports is going to slow down. So there are a lot of different signs that point to China slowing down. They're not going to meet their growth target for 2022. I would think that they're not going to meet their growth target for 2023 as well. So that opens up a question of whether or not they're going to be willing to make some some changes in their policy, right? And the positive, which is not that many positives now that I think about it. I was going to point out, the meeting between Joe Biden and the president of China at the G20 summit, which was reported as successful in some ways, right? And so you've seen financial markets react in a positive way to some sort of warming of relations between the US and China, although nothing concrete came out of it, I would say. So the markets want to look for the positive signs, but right now, I think the challenges and the pressures is there's a silver lining in all of this. I think that the pressures and challenges in China are so significant that it might lead leadership to change some of the policies and open up a little bit more and sort of smooth out some of those economic bumps that are already happening, really. So we have a vested interest in seeing China being strong economically because they buy a lot of the commodities that if we're not selling to them, that others are selling, and then we're just backfilling whatever sale that these other countries are not making in other markets, right? So it's China has still lots of influence in the ag markets for sure.
Well, we have a few more minutes to get to a few more questions. You mentioned China. What about the EU? We know that they're also a really big global player. What are your thoughts on their economic outlook?
Yeah, so good question, because Russia has lots of leverage, right, when it comes to the EU energy supply, and unfortunately, there's a lot of inflation there that has had more of an impact on consumers' purchasing power than what we've seen in Canada, for example, when it comes to inflation. So I'm not too optimistic with regards to the next 3 months, even 6 months in Europe. I do think that a lot of the countries as part of the European Union are going to experience a decline in their economic growth. So their GDP, gross domestic product, is going to decline, and that's going to officially be measured as a recession in Europe. And so, and really, I think there's upside risk for them or downside risk for them in the sense that, there's Russia with lots of leverage in terms of the energy crisis that there is in Europe. So overall, I think the prospect of growth are not great. And as a result, I do think that I would expect the Canadian dollar to stay relatively strong compared to the euro, for example.
Okay. Another question about farmland values. We know that FCC provides a farmland value report. We've seen that they've been very strong for the last number of years. Going through the higher borrowing costs that we've seen, we still see very strong projections for farmland values, but can you comment on what our expectations would be over the next 12 plus months, and or what really would need to happen to cause a big concern in those farmland values?
Yeah, so super good question, because at the end of the day, it's a market that we're still monitoring and gathering information. So our next report will include all of 2022. Will be released sometime in, I believe, scheduled now for mid-March of next year. So, but in the meantime, we released a mid-year update, which showed really strong growth, right? So if you look at markets in Ontario, BC, even in the prairies, we've had really, really significant growth the first 6 months of 2022. Now, there's always a lag a little bit. When you look at borrowing costs, interest rates, and you look at the increase that we've had, the major increase that we've had, for example, this year was in July. And so obviously was not accounted for in that first 6 months. So we do expect that the numbers that we've had for the first 6 months of 2022 are not going to be the same going forward. And especially if you look at those 6 months of 2022, that second half of the year, when we report for the entire year, we're probably not going to see numbers as high as we reported for the first 6 months. But having said that, anecdotally, right, if you look at some of the transactions that we're seeing, if you look at what's going on in the marketplace, there's a lot more about stability and even some increases in some areas where we haven't seen, land values on average climb as fast as other places. We've seen a lot of stability and in some areas, some growth. So the demand appears really strong. And when it comes to and supply is limited, right? It's one thing that we tend to forget is that supply is really limited. It's not just that they don't make any more farmland, right? It's just the fact as well that there's not a whole lot in the marketplace right now. And so I thought that maybe with higher rates, we would see a little bit of an increase in the supply of land for sale, farmland for sale, but we really haven't really. So bottom line is that at the end of the day, farm income and interest rates drive the demand for farmland. And right now the outlook remains positive for farm income. And so I don't expect a major shift in the farmland market, but I do expect that those really strong increases we've seen for the last 6 months, the first 6 months of 22 are not going to be there when it comes to the entire year, right? And we report in early 23.
Perfect. One last quick question before we wrap your session up for today. Canadian dollar. Do you have any additional comments to add?
Yeah, I kind of passed this over, right? I never actually talked of a forecast of the Canadian dollar, right? And this is really interesting because I did say at the very beginning, right? Our projections for 2023 are not over. We're still in the middle of looking at everything, right? And one of the things when it comes to the Canadian dollar is we've seen gain some growth, gain some value lately against the US dollar. But really, when you look at the exchange rate of our two currencies, it's not so much about strength and weakness of the Canadian dollar. It's all about the US dollar right now, given the flight for safety that investors have implemented or actually sought in the last many months, when it comes to the environment that we're in. So I think there was a really, really strong, the strength in the US dollar was really driven by the strong demand for US dollars. And that's the flight to safety that I was just talking about. So and so we've had, roughly in 2022, the story for the Canadian dollar has been one of a depreciation in the Canadian dollar with regards to the US dollar. But lately, we've seen the Canadian dollar go back to 75 cents. But if you look at what we expect for 2023, some sort of global economic slowdown, which would not be a good news for oil prices, we expect that the pace of interest rates between the US and Canada is roughly going to be the same. Actually, the US now is playing a little bit of catch up to us, but they'll catch up. So all of that's going to be a wash, really. And so at the end of the day, if there's more uncertainty in the world and then we have lower oil prices, I would expect the value of the Canadian dollar to be lower in 2023 than what it is right now. So whenever we end the year in 2022, I do expect it to be lower. I don't see it going to 80 cents. And our projections now are calling for even a 73 cents dollar. So we'll see if this recent increase changes anything with regards to the pattern in the exchange rate. But really, I think that we're going to stay in a low Canadian dollar environment for most of 2023.
Well, thank you for that, JP. We really appreciate you helping us make sense of some of those economic trends and impacts that we've all been experiencing.
Thanks so much, sir. My pleasure.
Perfect. Now, for the next 60 minutes, we are going to change gears and we are going to have a conversation with our next guest this morning, Michelle Romanow. We may go slightly over our initially slotted 2-hour mark today, but we wanted to ensure that we got full value as she is sure to be super exciting and engaging. Michelle Romanow is a serial entrepreneur who started 6 companies before her 35th birthday. She is a dragon on CBC's hit show Dragon's Den. She is the co-founder and CEO of Canadian unicorn Clearco, and has invested more than $3.2 billion in over 7,000 companies, making them the largest e-commerce investor in the world. In 2015, Michelle became the youngest judge on CBC's Dragon's Den. As a prolific investor, she has been recognized on Fortune's 40 Under 40 as a young global leader by the World Economic Forum and as one of Canada's 100 most powerful in Canada by WXN. And Canada's Angel Investor of the Year. She was also the only Canadian to be included in Forbes' Millennial on a Mission list. Michelle is a director for Vail Resorts, BBTV, and Queen's School of Business. She's also co-founded the Canadian Entrepreneurship Initiative nonprofit with Sir Richard Branson. So I'm very excited today to welcome Michelle Romanow and learn a little bit about her experiences. And I'm looking forward to getting some takeaways that I can impact in my life as well. So welcome.
Oh, it's wonderful to be here. Thank you for having me.
So, given that we only have 60 minutes, we have a ton of things that I'd love to chat with you about. But why don't we get started with a little bit of your history, your childhood education? Tell us a little bit about yourself and how you became on this path to being an entrepreneur.
Yeah, so the first thing is I have very much farming roots, which I absolutely love. I grew up in Calgary, spent kindergarten to grade 6 in Regina. So, I mean, that is certainly an area of all farmers. And I think there was this incredible work ethic that was taught to me at a very, very, very young age. And you compare it to, I think, some of the like luxuries that like kids want today. I mean, look, when you have animals and when you have crops, it doesn't matter if you're not feeling yourself. It doesn't matter if you're sick. You have to get up in the morning or your animals die. And there is this like work ethic that goes along with the agriculture industry that's actually rarely seen in other people. So I always felt like that was a huge part. Everyone that I knew, had a farm or was on a farm, and it was a big part of my childhood. So then I moved back to Calgary. My dad told me I could study anything as long as it was engineering. So Sarah, I had just a ton of choices. And so I ended up at Queen's for engineering. And I quickly figure out I'm going to be way better at building businesses than building bridges. And so I spent all of my time with 2 guys, and we played the game, what's the next $1 million idea? And that was all of our time we spent brainstorming different ideas that we were looking at. We went through hundreds of ideas, different app ideas, could we bring this product in from China, until we finally settled on pursuing caviar and fish farming. So you're supposed to laugh right now because that's the craziest thing that 3 21-year-olds could have possibly come up with. But we had really good reason. We figured out that worldwide supply of caviar was down by 95% because the world had overfished the Caspian Sea. And we were determined to build a business plan. So I remember being like, well, this is an old product. Who knows if people still want it? So from the Queen's University Library, I cold called Thomas Keller, who was one of the most famous chefs in America, and get on the phone. And I'm like, hey, Thomas, can you tell me why you don't have caviar on your menu? And there's this very long pause. And he goes, do you have any? I was like, what do you mean? I'm a student calling you from a library. How could I possibly have caviar for you? But I knew at that moment, if one of the most famous chefs in America couldn't get the product, that I would have a captive audience. And so off we went. We did what every single business student was told to do, wrote one of those 100-page business plans with a 50-tab Excel model to try and figure everything out. We ended up doing a bunch of business plan competitions and winning them, which was great because we graduated with like $100,000 in prize money. That's terrible when I tell you we needed $6 million to start a fish farm. So that was not going to happen. So my first business was trying to build a farm. But what we did figure out is that there was a wild supply of sturgeon that was still growing in New Brunswick that hadn't been caught for a number of different years for a bunch of different reasons. So I remember calling my parents being like, hey, Mom and Dad, I've said no to all of my job offers. I'm going to go and just move to New Brunswick and see if I can make that work. I mean, they thought I was completely crazy. So we first get there, Sarah. And the first thing you figure out is that you can't just go fishing in Canada. You need a license to go fishing. So now we have to figure out this licensing thing. And there is only 5 sturgeon fishing licenses left in the province because they were grandfathered a bunch of years ago. So I remember calling fisheries being like, hey, can you give me the name of the 5 people with the sturgeon fishing licenses? And they're like, no, that would violate like all of our privacy rules. Like we can't do that. So I end up calling back every day from a different phone number with a different accent, asking the exact same question until I finally get the person on the end who's like, oh yeah, I think I can find you those numbers. So I certainly get I get their names, but not their phone numbers. So I am now calling every single Elmer Smith in the phone book. And I mean, this is the weirdest cold call you've ever got. This is like, hi, I'm looking for the man with the sturgeon fishing license. And so I finally got the right guy. His wife aptly picked up the phone and she's like, no one's ever called us about this. And each of these fish were exceptionally valuable. They're very big. They're like 200 pounds. If you get a female that has eggs in it, I mean, they're worth, $5,000 a fish. They're really, really pricey. So in the back of my mind, I was willing to pay up to $5,000 a day to rent this license. They figured I could at least get like 2 or 3 fish. So I'm gearing up for my big negotiation. Elmer is on the phone with me. I'm like, Elmer, I would like to rent your license. How much would you like? And he goes, well, you sound like a very nice young lady, Michelle. How about for you, $500 for the summer? And I was like, oh my God, of course. That's like the greatest deal I could possibly imagine. It's like, great. Can we go fishing tomorrow? And just as my heart sank, he was like, Michelle, I'm 70 years old. I can't go fishing anymore. And I was like, no. And he goes, but someone else can go fishing under my license. I was like, great. This can't be that hard. I just need to find a commercial fisherman in New Brunswick. It's like finding a farmer in Saskatchewan. Like, this cannot be this difficult, right? So we literally are asking the woman that works at the government who's helping get a license, get a food inspection license for us. We're like, do you know any fishermen? She's like, oh yeah, there's this guy named Ted. Ted's looking for work. I was like, great. Ted have like an email or a phone number? And she's like, oh, that's not how you find Ted. She's like, you have to go up the street, left at the blue house, right at the greenhouse and the little yellow house. That one's Ted. And I was like, oh my gosh, they do things a lot differently here. So I get to the house that I think is Ted's. And I get to the house that I think is Ted's. I knock on the door and there's no one there. And so I get back in with my 2 co-founders to our Toyota Camry that's, 20 years old with no air conditioning in the middle of the July heat. And all I can think to myself is, I have an engineering degree and an MBA, and I'm literally stalking a fisherman right now. That's what my life has become. So we waited for 10 hours until Ted came home. And Ted finally gets home and he's like, oh yeah, I can go fishing. He's like, I have the right gear. I was like, great. I was like, can we get started tomorrow? And he looks at me and he goes, I just have one problem, Michelle. I don't have a boat. And I was like, what do you mean you don't have a boat? And like, we didn't need a fancy boat. This was like a 22-foot boat with an outboard motor. And so I remember I did the first financing deal of my life. I said, okay, fine, I'll buy you a boat. And every time you buy a fish, we'll subtract 10%. You can have a boat by the end of the summer. So now we're ready to go. We have the license, the fisherman, the boat. We're getting up at 6 a.m. We're meeting Ted, driving an hour and a half, meeting Ted at the side of the river, finding the fish we want, taking those fish to the processing facility, gutting them, cleaning them, making the caviar ourselves. This is like a 6-7 hour process every day. We then, it's like 3 o'clock, barely get lunch into us. We're getting on our flip phones. We're calling restaurants being like, hey, you've never heard of us. We just incorporated 2 weeks ago. We're a company called Evandale Caviar and we caught a fresh fish today. We want to know if you want it. You have to tell us before FedEx closes at like 5 o'clock. So like, you don't have very much time. And remarkably, chefs loved this pitch. They had not seen, the farm to table movement was just starting to happen. They had not seen this product available in the market. They couldn't believe these like kids were calling saying they had done this. And so by the end of the summer, we had sold to, 200 high-end hotels and restaurants across Canada. And just as I thought things were going to get easier, in a second, everything changed. Because what I'm failing to tell you is we are now in the fall of 2008, in the biggest recession of the last 70 years. And I am selling the world's most unnecessary luxury product. So this is not going to go very well. And so it really taught me my first two lessons about business, right? The first was that, if you want to be successful, you have to roll up your sleeves and get really, really scrappy. Like there's no one that will do the work for you. It's just constantly being like, okay, that didn't work. We'll do this. This didn't work. We'll do this. Get on the phone with someone, convince them of something. We'll do that. And the second thing I really learned about building a business is that, you have to get out of planning mode into execution mode. But all the planning in the world won't make you successful, and certainly won't prevent you from failure. So that was kind of the early days of, my journey starting off building a fishery.
That is super exciting. I can already tell that you are very persistent. You tackle challenges head on, and you're very innovative. It just unbelievable story when you think about that business. Now, you also mentioned you started 6 businesses before 35. What were some of your other ones? And tell us some interesting facts about those.
So I think that I always love to tell the caviar story because it's just so raw. Like that's exactly what we were. And then we applied that same level of persistence to so many other businesses. I think that, so after what happened when the caviar business failed, we tried 6 or 7 other businesses. I tried to see if offices wanted fruit delivery. I tried to look at financing water heaters. Like we tried to look at a bunch of different businesses. None of that worked. The recession got so bad. I ended up taking a job at a big retailer in Canada as the director of strategy. And I saw e-commerce starting to blow up in the early days. So in 2010, crazy as ever, I looked at, my same 2 co-founders that I started the caviar business with. And I was like, well, what if we just build an e-commerce business this time? And instead of, this massive 100-page business plan and this huge Excel model, really, we were like, let's build a business plan the size of a Post-it. So, what was our thesis? Well, we would build an e-commerce website and use, overseas software developers because Canadians were too expensive. We would launch at a trade show and we'd get a famous person to tweet for us. That was our whole business plan in the early days. And so I remember what happened when we launched Vitopia. Well, we got to the day of the trade show. The website wasn't ready because the software developer said we didn't pay them enough. So we actually launched at the trade show with not a website, a JPEG, which is a picture of a website. We tried to make it look as realistic as possible. We opened up the picture inside of a web browser and we had just enough time to code one button into that website, which was the buy button. And I remember then the famous person tweeted for us and that did nothing. But what did happen at that very first trade show is I totally understood my customers. We did like $100,000 in sales that first weekend. And I never guessed from there we would have become, one of Canada's fastest growing companies. We acquired millions of users over the year. And it was all started off the last $5,000 that was left in our Evandale Caviar bank account because the legal name of Vitopia is still Evandale Caviar Inc., which I think is so funny. So there was that. We then, one of the things that's hard to appreciate unless you're a founder is that there's so many things that don't work. And there is so much failure that happens as you're trying to build something along the way. And so, after we built the e-commerce company, we were like constantly trying to look for new business ideas. We launched a competitor, like a scheduling software system that was basically an open table for everything but restaurants. Got 100 customers on board, just couldn't make the business work. We launched an early competitor to Uber Eats in 2012. That I hired the delivery drivers myself. We had 100 restaurants on board, couldn't make the model work. We then were like, oh, well, consumer packaged goods companies want to send samples to people's home. We built a, like a Birchbox type business where you could get weekly samples. That business didn't work. And then we started being like, well, we have a lot of users that want really good discounts. So what if we could build, an app where to get a discount, you just took a photo of your receipt? And this sounds so obvious now that you would take like a photo of a piece of text. But in 2013, no one was taking, the photos were so grainy, no one was taking pictures of text. I remember sitting in my office being like, will anyone take a picture of a receipt? Like, this is so crazy. And so we launched this app called SnapSaves, where you could go to a grocery store, take a picture of your grocery bill, and then you would get a bunch of discounts on the products that were on sale. And on average, you'd save $20 on your grocery bill. And it was totally viral. Within 8 months, we had like most of the major consumer packaged goods companies on board. Groupon came, they're like, we want to buy the company. They bought the company on my 28th birthday. And all my friends are like, oh my gosh, Michelle, what was your formula? Like, how did you get this to happen? And I remind all of them that it really wasn't 8 months. It was those 8 years of iteration that went into building that. And so, you know, when you feel like you're failing as a founder, you're just getting going. Like in this business, failure is the byproduct of success. You need to try so many ideas with so much diligence, putting your whole heart into all of them to get 1 in 8 to really work out. And so that's the unfortunate secret of being a founder, is you just have to try so many things for such a long period of time, you know, to get into it. And I think then probably like, you know, the failures, they end up being those iterations that get you to a big innovation. It's not like one big idea you have one day that becomes a massive innovation. It's actually a lot of iteration that really gets you there.
And I'm sure a lot of those iterations comes from, you know, trial and error, feedback from your customers. But in terms of, you know, your new ideas, and when I hear you talk about some of the things you tried, you were really on the edge of groundbreaking ideas. Are those yourself? How do you schedule time to be innovative, to give yourself time to really think in such big picture scope, or do you use market research? How do you get your ideas?
Oh, that's a very good question. A really good question. So first of all, I don't believe in market research. That's maybe the first bold statement I'll make. By the time McKinsey has written about an industry, there's already multi-billion-dollar players. And so you are too late. And then I think for the most part, market research represents intentions, not reality. So let me give you an example. And I wish I could see the crowd today because we would do this exercise in real time. But if I was to ask people, how many people wanted to work out this morning before they started their day, my guess is that 90% of the hands would go up in the room, because everyone wants to live a healthier life. Everyone knows that exercise, like these are irrefutable facts at this point, that you have to move your body. I don't think any of us can ignore them. Then if I asked you how many people actually worked out this morning, 20% of the hands would remain up in the room. And that is what market research is. Market research indicates an intention to do something, not a reality to do something. And businesses are built on the reality of doing something, not the intention of doing something. And so you cannot ask questions into building a business. You have to actually build to prototype really fast. So I'll give you an example of this. Like, I think crowdfunding and crowdsourcing is one of the greatest things that has happened in entrepreneurship, period. Because what it does is it allows you to test an idea before it's actually built, but not get market research, get people's real credit card. So when you launch something on Kickstarter, you know, you've made a video, you said, this is my great idea, I'm going to launch this, I need $100,000 to put this into production. Will you give me your credit card? Knowing this product may never even ship. That is intention to buy. That is like, I will truly put my money where my mouth is. That's not like, I want to work out. That is, I actually went to work out and I actually gave you my money to do it. And so the sooner you can get to getting real customer feedback, especially when their dollars are at stake, that's when you can start to get real feedback on like, oh, I think I'm onto something here. So that's maybe the first nuance I'd make. Your second question was really good. I've actually never even thought about it that way. I think I am an obsessive, curious person. And when I want to understand something, there's not like a time that I'm making for it. It's like all consuming is the best way to think about it. So, you know, when I'm like looking at a new industry, I'm reading all the blog posts online. I'm reading all the news that I find publicly available. News and things on the internet, the way I think about that is they're going to give you maybe 50% of the information, 50% at best, because no one is ever going to share their best secrets with journalists ever. But they will if you call them, perhaps. So as soon as you get smart enough to understand an industry, You then want to really try and get on the phone with a bunch of people. And you can do this. I mean, this used to be so much harder because you used to like have to use like the phone book and cold call people. Now you can use GLG or some of these other platforms where you can actually find some experts. But you know, I've had a lot of people over the years message me, be like, you know, I want to start a business like SnapSaves. And I'm like on it, like I give so many of those people my cell phones. I'm like, let me save you 5 years of your time. Like I know exactly what this is going to be like. But you have to realize that good information about industries comes from people. It doesn't come from the internet. And so you have to get to that next level. And then within that, after you've done kind of all the internet research and then all the human kind of research on like, does this feel right? You just have to get to that Kickstarter phase where you're launching something to let the market respond to. And if you can make those first two phases, like, I don't know, I know it's going to sound crazy, like 2 weeks, 3 weeks, a month, like I still genuinely believe that you can test any idea with 3 months and $10,000. Like you can be really, really scrappy if you want to be. It's that people and companies think you need way more bandwidth to do something. And I get that it's harder to do that within a company, because there's way more to lose and there's brand risk and there's all sorts of other things that, you know, could cannibalize a business. But, you know, when you want to be entrepreneurial, you can go pretty quickly if you're forcing yourself to do that. But it's a great question on, I don't think I even make time for it. I think it's just something I do.
So then thinking about Clearco, how did you get the idea for Clearco?
So this was an interesting one. So I think there's a couple things at play. The first was that, you know, I had just watched, so we started the company in 2015. So in 2015, you know, Uber's at their peak, Airbnb's at their peak. Social media has just really felt like it's taken over the world. And there's this huge reflection point where it's like, well, like, you know, everyone said that nothing was going to take down the newspaper, right? Radio wasn't going to take down the newspaper. You know, TV wasn't going to take down the newspaper. And finally, like social media got a real grapple on the traditional media industries. And so if the last decade had been changing media, I thought really the next decade would be changing the banking system, because consumers had just learned that they could get a taxi on their phone in 2 clicks. Like Uber is truly a 2-click process. You're like, I am here, confirm that. And then everything else is automated. They pay automated, they direct you automated, they find you. Like it's crazy how they took a process that used to be, I don't know, 25 steps by the time you contacted someone, found someone, communicated via phone, to something that was much easier. And so, you know, I'm calling my bank to change the PIN code on my debit card, and it's like a 50-minute phone call. I was like, the consumer is never going to tolerate this. So I think we had some good ideas that fintech was going to be the right vertical to go into. That was probably the first thing, and that banks were really not designed for founders or entrepreneurs or the next generation of, you know, what they call a contract worker, the 1099 worker in the US. That was kind of our original thesis. And the other thing I got to share is like, there's not a whole lot of comparables at the time that's giving you confidence in that data. So in 2015, there was one fintech exit, and it was the company called Simple Bank that had been sold to BBVA for $50 million, which in the technology world is a very small exit. It's like your Series B round. That was it. There was no like other big, massive stories. I mean, you know, PayPal was a decent story from a decade before that, but really nothing else had been done. And so when you're starting in an industry that feels very new, you don't have, you know, all these $100 million exits that you're like, oh, we could be comparable to this or comparable to this. You're just kind of like going into it. And then I had another really interesting experience. Nicole, I ended up getting asked to join the cast of Dragon's Den, almost completely by accident. I can tell you the story later. And now my first season of the show, you know, all I know is that like I'm the poorest one there. I'm the youngest one there, and I feel really deeply inadequate. And so we see 300 pitches a season, and all the pitches were starting to sound the same. It was, hey, I'm coming in with my great e-commerce product. I need $100,000 to grow my business. I'm giving up 10% of my company to do that. Will you support me, Dragons? And I kept being like, well, what do you need the money for? And the founders always said the same 2 things. I need money to buy my inventory, which makes total sense. And I need money to buy customer acquisition, which in today's world translates to Facebook and Google ads. And I just remember one day, first season after that, being like, why are founders using the most expensive capital in the world to do something that's has a fixed return. Like that's the whole magic of Facebook. You inject $1, you get $3 in sales. Like, why would you give up a piece of your company to do that? And so I remember on the show, just throwing this out there, I was like, the next founder I heard with that pitch, I was like, hey, I'll give you the $100,000 you need. Instead of taking 10% of your business that I would own forever, I just want 10% of your revenue just until you pay me back my capital plus, 6%. And the founder's like, that sounds like a loan. And I was like, no, a loan in this space, I would have a personal guarantee against you. So if your business fails, I'd take your house. And, it would have a fixed repayment period and compounding interest. That would be a loan. I'm like, this is a true rev share. This is different. And they're like, and after I pay back your money plus your 6%, you're gone. And I'm like, I'm gone. And they're like, I'll definitely take that deal. And they're like, well, what's the hitch? I was like, well, I have to see your digital data sources. You have to show me your Facebook ads and your Google ads and your payment processor. And Nicole, it felt like such a small deal at the time. It was like, another deal done on the show. I really liked the founder, thought it was a good market. And, that became a multi-million-dollar category creator business where no one had thought of doing revenue share businesses for e-commerce. No one had thought of, using all these digital data sources to do better forms of underwriting. And today we've deployed more than $5 billion to more than 10,000 different founders in 12 countries around the world. It's been pretty crazy. We have, as a little Canadian company, we now have a Clearco of Latin America, of Asia. We have, I think, 40 competitors around the world based on the model we pioneered out of our Toronto apartment, which I think is a really great Canadian story.
Interesting. Well, I'm sure you got to meet a lot of interesting people on Dragon's Den. When we talk about owners, business leaders, there can be a lot of pressure on those people to be the ones that innovate, that, bring change within an organization. And how can we encourage leaders to have that mindset throughout their organization?
Which mindset?
To innovate and to always ideate and bring about, required change and be able to move forward versus getting stuck in, maybe how they've always done things.
Yeah. I mean, I think that you have to really look deep inside your organization and answer the genuine question on, do you tolerate failure at all? Because as I shared, innovation is a whole lot of failure. It's a whole lot of things not working. And it's testing things very quick. I mean, when I hear companies testing things, they're like, oh, we're going to test this in like 2025. I'm like, guys, the world is going to be totally different in 2025. Like, you got to get something out the door really, really, really quickly. And it's always the innovators that make a huge difference, but you have to be prepared to fail. I mean, look, there's a great story in Canada on the credit unions, and the credit unions were the first people to lend money to women. They thought it was going to be absolutely crazy. They were accused of like destroying the family structure. They were accused of doing all sorts of things, but they ended up taking the risk. And it was one of the massive things that, changed the egalitarian landscape for, first of all, women, but actually grew the economy enormously. And at that phase, I mean, I'm sure there was like a million reasons you could write on a piece of paper on why this would be bad, and a million reasons why this would be scary. But someone in that organization, and someone was ballsy enough to say, we got to try it, and we will, retreat if it doesn't work, and we will try something else if it doesn't work. But that's really like tolerance for failure is the number one thing. The next thing is like, culturally, can you do this? I mean, I think the single worst line I hear in organizations all the time, I mean, there's lots of very, very bad things, but for innovation is these words: we've always done it this way. Well, like, of course you've always done it this way. We've also do things in society always a way, largely for reasons that make no sense today. Most of the reasons we do things in society and the way we do things are based on historical reasons that have very, very little relevance today. And whether we look at, something as simple as a religious rule on why we don't eat a certain type of animal because 2,000 years ago, that animal was more prone to diseases and bacteria than they are today. Like these are very deeply rooted things. And religion maybe isn't the best example, but like every industry has hundreds of reasons that things are done that are based on something historically, not something we would do today. So if we just took off our glasses and just imagined what we could do with a blank slate, with the technology we had, we would probably imagine something very differently. The third concept I would take in like leadership on innovation is that you do require a step change to be noticed. So there are incumbents that can iterate at 10% better, 10% better, 10% better every year that can build a very good business. But if you want to get users to switch from whatever they are doing to something new, your product doesn't need to be 2 times better. It needs to be 10 times better. It needs to be so significantly different that it is worth someone's time and attention to get through the switching costs of doing that, right? You think about like the switching costs of an electric car, right? It's much different to be able, like, I need this plug in my house. I need to figure out how this all works. Like, and it's worth it. It just takes something to do that. And so I think that's the other thing that I would consider.
Well, the credit union is a really great story about disruption. When we think about disruption, how do you see that traditional companies can be more of a disruptor? And do you have examples that you can share?
Yeah. I mean, another really good one from the banking space that was and most people don't know this story, is ATMs were a massive disruptor. So when the ATM came out, people were absolutely up in arms. They're like, you cannot have a cash dispensing machine. You need to have a teller. You need to have ID verification. And you are literally going to promote violence on all of our street because you're going to have people being robbed at gunpoint. People genuinely thought this was what was going to happen with the advent of the ATM. And it was, a series of banks and credit unions that effectively said, no, we're going to take the risk. This is important for people to be able to get access to small amounts of cash after hours. And was able to figure out, I think, something that is now, an ATM is ubiquitous. I couldn't think of a more ubiquitous item in a hotel or a bar or anything else that really started off effectively saying this would be a complete menace to society if this actually happened. And so, who are those people in organizations? I think they're people that have often been founders themselves and are willing to, are at the stage in their life where they want to come and build something within a larger organization. I think they're people that are comfortable with failure and taking risks. And then I think they're people that can just be like incredibly compelling. Like, one of the things that most founders don't need to talk about is like, your job is selling. I'm like, everyone's like, your job is being a founder. I'm like, my job is to make magic, to make things happen that didn't exist yesterday. But that is selling, my friend. And so, look at who you sell. You sell to get capital into your business. You sell to get people to join your business. You sell to get partners. You sell your own product. You sell when things go wrong and you want people to continue to believe in the value of the vision of either the product or the company you're creating. And so honing and mastering those selling skills and being able to be compelling and persuasive becomes incredibly important.
So when you talk about your sales strategy, do you have like a 10-second or a 30-second summary of how you would encapsulate your selling strategy? Or sales strategy?
There's hundreds of techniques I've learned over the years, and it totally depends if it's a pitch, if it's a negotiation. I think the first part of my selling strategy is to be very genuine. I think, I took an undergrad course in social psychology, and there's one fact I'll never remember, and it's the most attractive personality trait in any human being. This applies for every culture around the world, is to be genuine. That is the number one thing we love about other humans. And so no matter who you are, and this is such simple advice, but I think we ignore it. No matter who you are, be yourself, right? Like, if you kind of veer to one direction or another, that doesn't mean don't care about self-improvement, but be yourself. Don't pretend to be someone else. Because if people feel like, what I see is what I get, they are a whole lot more likely to trust you, which is the basis of a good sale. So being very genuine about the things that have not worked, the things that have worked, why you're optimistic, is really, really important. Building a personal connection and story to why something matters to you is incredibly important. People think that pitches are about facts and numbers, and they are a little bit. Business cases are about facts and numbers. But what's so fascinating to me is that human beings have a terrible capacity to remember facts and numbers and an outrageously strong capacity to remember stories. So let me just like give you an example. If I just said the word The Princess and the Pea, 95% of this room would know what that story is. That there was a princess that had to sleep with this pea and then she comes, you're like, this is ridiculous. Most of us have never heard the story of The Princess and the Pea for the last 35 years of our life. Like, unless you have kids and somehow read them this fable, like no one, I have never reread The Princess and the Pea, but I can remember exactly what the story was. So isn't that bizarre that we could remember a story that someone told us when we were 8 years old about something that has never had any relevance to your life, but we can't remember a fact from a pitch that we heard at work 2 days ago? Like, really let that sink in. So if you are not telling people a story that they will remember, they are not going to remember the facts of your pitch. And so you need both. You need something that's very compelling to show them why you're the right person and you're going to build this and you should be the trusted leader. And then you need a lot of facts to back up why that is mathematically true in the case. But you got to start with the first piece.
So you mentioned two great strategies about being genuine, storytelling. What other key strategies have had a big impact on your success?
Strategies in like what dimension? Maybe you got to be a little bit more specific, because I have a strategy for even how I brush my teeth. I want to be able to give more detail there.
Let me come back to that, and I'll think about honing my question a little bit more. Maybe jumping into a question about some of the uncertain times we are in with regards to our economic and some of the information that JP talked about earlier today. You clearly had to navigate through some uncertain times in your businesses. Can you share with us some key decisions to help businesses grow forward right now?
Yeah. So first, I think that a lot of people are scared. Recessions are super scary. And they all play out a little bit differently. And so, I mean, last week was terrible for the tech industry. We had 20,000 people probably laid off across the industry. We had FTX go bankrupt, which was a company that was seen as way too big to go bankrupt. Like, there is a lot that even happens in a short period of time. So I think the first thing to do is to really look at either your life or your core business, whatever you're looking at, and being like, how do we make something profitable? And then how do we get a war chest today so that if this gets worse, we have the opportunities to really make incredible moves in uncertain economic times. So what happens with both companies and consumers is during recessions, people are forced in a very different way to change their behavior. So, I was very, very close with the Groupon story, which was, a lot of kind of the early e-commerce and bringing online businesses to the internet was happened because the 2008 recession was so bad. People are like, I'm not going to pay full price for a restaurant or a manicure or a thing to do with my kids. I want a discount site to do that. And so we saw millions of people change their behavior overnight to truly save $5 or $10 on the things that they were planning to do anyways. And that applies in all industries, right? That was the same thing that happened with Uber, is like, oh, I'd be willing to ride in a stranger's car if it could save me some money. I mean, that was a completely bizarre and ridiculous concept before, that became mainstream. The concept of Airbnb, oh, I would stay in a stranger's house with them in it. Like, all of these things seem so crazy as we talk about them today, but it was actually a recessionary environment that made that even possible, that people were thinking about changing consumer behavior. So the first thing is kind of to take this is a 3-step process. You take stock of your business. You're like, how much money do I have? How close am I to profitable? Am I profitable? How much runway do I have? How much do I have to worry about this? And can I get my own house in order? The second thing is, can I be now opportunistic? If my own house is in order, can I raise additional debt or equity and take advantage of the fact that a lot of businesses are not going to be able to respond as quickly to these current economic environments? So can I buy other businesses at a fraction of the price? I think we are just at the very beginning of this cycle. So the buying phase on this cycle, I would predict, I don't know the future, would be probably in the next 12 months from now. And then it's to remember that that these are the times that you can really introduce new products, because adoption curves are very different than they would be traditionally. It's very hard to get people's attention. I mean, like, the price of all advertising went up. The price of hiring everyone in the technology industry was up to such outrageous levels because there was so much money in the ecosystem. It made it actually very difficult to build. And so now, given that we're in a very different economic period, it's like, how we're gonna move through all of this.
So as we, look forward, you mentioned adoption curves. What is your opinion looking over the next, say, 1 to 5 years? What are some of the top line trends that business leaders should be watching for?
I think probably the number one trend that I would look at from a technology point of view, and we're still just very scratching the surface, is like the introduction of AI into literally every business under the sun. I mean, the same way that the internet, everything that we do now is run on the internet in a very different way. The ability for us to take everyone's jobs and to automate a portion of that job is going to change dramatically. So most people think of AI as like replacing jobs. There's actually very few of that. There's some of that. There's going to be a far smaller amount of that than actually, like, look at everything you do in a day and think about if you could automate the 20, 30 worst parts of your job. You'd be like over the moon to do that, right? And so that is what, that's what I would really try and think about is that's like a major trend, and really understanding it's beyond automation now. All of the smart automations you can do with your own data. And look, we were able to change an entire industry because we used AI and data very, very differently than our peers had. I mean, all of SMB lending was folks that said, oh, yeah, you want a small business loan? Let's look at your personal credit score and let's see what your house is worth. And then I can give you money backed by your home. I'm like, but that had nothing to do with your business. That didn't have to do with the revenue of your business. That didn't have to do with the unit economics of your business. That was happening everywhere around the world. So you think about an industry that was that large and how little technology and AI they were using. That was probably like the biggest one that I would start thinking about is how, and this isn't like, hire Accenture to figure it out. It's like, figure it out yourself and like the things that you could automate in your own business today.
Neat. Well, you're such an inspiration to have us on here today. So I'd like to pivot back to a little bit more about you. What motivates you? You obviously are, a go-getter. You've got lots of ideas and you're always finding ways to move those forward. But, motivation on, kind of what you would call your regular life. And then after a rejection, how do you get back up and, start moving forward again?
Yeah, it's a great question. So motivation changes over the years. There's not like a single day that you could not say you're on an ebb and flow. And so that's a really normal way to feel. I think as a founder, I always tell people that they can do it, but they have to really want to do it, because this is exceptionally hard if you don't want to do it. This is a job that I would describe as I get a black eye every 3 days. And it is so horrible and so fucking painful. And it's like, again, I got to walk into that ring and like something goes wrong. I mean, 2 times a week, something blows up in my week that is completely not anticipated. And that's really hard. And so, you just got to get up and you got to be like, hey, here's my black eye, walking back to that ring. I'm ready for another fight. I mean, I have a firm belief that I don't even give up on a day. Like, I'm having a bad day. I'm like, no, I'm going to turn this around. 3 more meetings today. Like, let's see what I can. So you really need this gene that keeps you very resilient. And I've tried to identify what this is in other founders, because it's like, when you do equity investing, it is the secret. It's like, who's the founder that's going to basically have the highest pain thresholds and then going to be able to pivot all the different things? Because when you see a pitch on Dragons Den, it seems so simple. It's like, oh, well, here are the economics and this is the business and this is the market. You can get a lot of confidence in those things, except nothing's going to matter, because probably someone's going to copy that product, that, something's going to happen, and that entrepreneur is going to have to figure out how to pivot really, really, really quickly. And so you are looking for someone that is hugely resilient. So then the question is, where does resilient comes from? Well, it comes from people that, you know, had harder backgrounds, that might just need it. Like they might have no other options in this world than making something work. That's one formula where you can get really successful founders on. You know, that's not universal, because then you can get founders that are from really rich families that don't need it, but they have such a chip on their shoulder to prove someone wrong, their parents, their spouse, their friend, themselves, that, man, you can get an extraordinary amount of motivation when you get the, like, I'm proving it to you. And so I kind of try and look for both of those things. I think for me, I'm an exceptionally competitive person. I felt very bad for the first 20 years of my life about being a competitive person, because I was taught that was a deeply unfeminine trait, that, you know, women should care about like everyone winning and everyone getting along. And I'm just not that person. Like if you put a chess set in front of us now, Sarah, it'd be really fun. And I would just want to win. I would just be like, and I wouldn't be a poor sport if I didn't win. And I would also understand that this is like a chess game that had no influence on the trajectory of the rest of our lives. But I think that the will and the desire to win, for sometimes the sport of it, is really, really important. And then I think the you know, those are all just like the basic personality things that get you out of bed. What ends up keeping you out of bed to do stuff that's really hard is the impact and the mission that you have on what you are doing. And entrepreneurs get to have an enormous amount of impact in this world. It is the single best career, I think, in the world to have impact. I look at, you know, like look at a big challenge like climate change. You look at the trillions of dollars the governments have spent. They've had still less impact today than the entrepreneurs that have built electric trucks and cars that people have wanted to drive, the entrepreneurs that have built the Nest thermostat. Like there was all sorts of real innovation that came out of founders that have made, truly, if we're just measuring impact, that made more of an impact than people that had way more money and way more time and way more influence and the ability to do that. And so that's why you should be a founder, because if you see something that's wrong in this world and you see something that you want to fix and you see something that's personally hurt you, you get to build something that will change it. And there's lots of bad parts of capitalism, but the best part of capitalism is that then other people have to compete with what you put in the market. And so you can force not only yourself to become better, but you can force an industry to become better. And that is an extraordinary amount of positive power that you have as a founder. And so, you know, the mission at Clearco is that everyone that has a great idea, that has a great business with great unit economics, to get access to capital. And unfortunately, that's not how the world works. The world works today on, if you know the right people, you have access to capital. And it's frankly worked that way for the last 2,000 years. If you knew the king 2,000 years ago, your roads got built. If you didn't know the king, your roads didn't get built, and your ideas didn't get funded. And so if we can do that in a more data-driven way, you know, you have a real shot at making a difference. And I mean, like we didn't even know we were going to do this, but our stats are crazy. I mean, in our portfolio, like half of our founders are women, a third of our founders are BIPOC, a quarter of our founders didn't go to university that we have backed. That means we put what, $1.5 billion into founders that didn't go to university. That no one would believe that. And it's because we did it. That's like completely data driven. And you know, one of our early success moments, and I remember we were like a team of 100 people. We were in like our old kitchen and crammed in our old office. And I still remember the day. So we were one of the first big fintech companies, along with an American one, to launch a product for founders that gave them capital but didn't have a personal guarantee. So we couldn't take their house or their business if they didn't pay us back. And we thought our data was good enough that we could afford to do this. And I remember the day that Amex launched a credit card that didn't have a personal guarantee for founders. And it's like, we were this little Canadian company that caused a behemoth to change what they were building and to make their product more competitive. And I just think that's like a great example of the absolute enormous impact you can have. And so it's like, it's worth the build. And then I think your own mission and your own customers keep you very motivated to be like, okay, I got to keep doing this because I will have a lot of impact on the world.
Yeah, that resonates a lot because I know you've really helped us understand, how to recapture and live in that entrepreneurial mindset. And I think a lot of us do a great job. Again, we already talked about the work ethic in agriculture, and I know that all of our partners here today are striving to serve their customers. But, when you go through a year or a period of time with just so many challenges, it can be hard to wake back up and, one foot in front of the other and know that it's not personal. And so you talking about, getting 3 black eyes, in a week, and that's what I strive for. And it's like, oh yeah, everybody else does this too, right? It's not just me that feels like, sometimes the road is a little bit steep. So super inspiring to hear you kind of share that advice with us. If you could go back, what would be one piece of advice you would have given yourself 10 years ago?
Oh man, I like overanalyzed everything. I think that I, lost sleep about things that, were just so stupid. And today I wish that I wouldn't have done that. Like, I wish I would have slept a little bit more. I wish I would have made a couple more, gut decisions, because it wouldn't matter. The best framework I give myself today is like, Michelle, if this is a Jeff Bezos framework, it's a great one. He goes, if this is a reversible decision, we should make it very, very quickly. We should just do it. And if it's not the right one, we'll just retreat. If it's an irreversible decision, we should spend an extraordinary amount of time making this decision. But when you think about it, there are very few irreversible life decisions. Having a kid is an irreversible decision. You can't give it back, unfortunately. But short of that, there are almost no other. I mean, you move to a country, you don't like it. You take a risk, you start a business, I don't know, even if you marry the wrong person, like, those are reversible decisions at the end of the day. And we give ourselves so much stress as we stress out about, these things. So I don't know. I think that's one of the pieces of advice that I would give myself is, I know that sounds ridiculous because, it's also easier to, it's much easier when you don't have to take your own advice. So I know that part too.
Absolutely. So do you think analysis paralysis impacts a lot of businesses in a negative way?
Oh, enormously. Like, you're never gonna be able to fully model what's gonna happen. Like, you can model, like, does this make sense? And does this have positive unit economics? And, if we get to some scale that seems possible based on our, the number of customers we have today, can we do it? But beyond that, I think we spend way too much time in analysis and way too little time testing. And it's not one test, it's a test and iterate cycle. That's where people are missing. You don't put one test in the market, you're like, that fails. Nothing is successful the first time. Like, get that out of your brain. You're going to get that. You're going to hear a little bit of feedback. You're going to do something different. You're going to get the second iteration of it, and the third iteration of it, the fourth and the fifth. And it's only going to work on number 8. So if you've mentally set up your mind and your team's mind for something to be successful on the 7th, 8th, and 9th iteration, it's so much easier to get there.
Yeah. Well, we only have a few minutes left, so I'd like to ask our audience, if you have any questions, start putting them in the chat so that we can get to them and allow Michelle to address them. But one of the other questions I have is, related to economy and the recession potentially coming. Canada has seen an influx of investment into our tech sector over the last number of years, both in dollars and human capital. What makes us attractive for tech to do business here? And, are we the Silicon Valley of the North? And, what does that look like?
So Canada is making strides, but is not there yet. We are not quite Silicon Valley North. That's a wonderful thing to aspire to be. But I also don't want to be, we are not nearly where we need to be. So compared to 10 years ago, completely different. There was no early stage funds, early stage accelerators. Like, we have made an enormous amount of progress attracting money and capital to the ecosystem. We still need a lot more experience in building. And so I heard this as an early stage entrepreneur, and I just thought it was the craziest thing ever. All these people would be like, oh yeah, it's just like we don't have enough talent in Canada. And I was like, how is that possible? There's like 30 million people in Canada. How is there like not? Like, I'm like, these people are bizarre. But then you get to a phase where you have, 500 employees. You need a CFO that's taken something from $50 to $150 million of revenue overnight. And you start looking for CFOs that have done that in Canada, and there are like 3, and they all have great jobs. Or and again, you can't, like, sometimes when you switch industries, it's hard. You can't take someone from mining, you can't take someone from oil and gas, you can't take someone, like, you have to have someone that understands the technology industry. So can that happen? For sure. Do we need to continue to like invest and get more capital in Canada? Absolutely. Is it now easier than ever to attract American capital to Canada? For sure. That's made a massive difference. And I'm very bullish on the Canadian ecosystem. This is going to happen and this will happen. It's still going to take a little bit more time, and let's just not get too ahead of our skis on this one.
Okay. We do have a few questions coming in from the audience.
I love it. You can ask me anything as an audience question, by the way. I'm an open book, as you can see.
Do you love caviar?
Do I love caviar? I didn't really like fishy things that much, and now I really like caviar. I think it's delicious. I like black caviar more than red salmon caviar. But the first caviar I ever tasted was caviar I made myself. So I had to figure out trial by fire if it was good or not.
That wasn't our audience question. You just said, ask me anything, and that was
there you
burning
go.
question with your business. But the question from our audience was, what are your thoughts on the average customer's opinion on climate change in Canada? And do they see a need to change, and will they be that drive that eventually we see?
Oh, wow. That's a loaded gun question. It's a good one. So this research is a couple of years old, but I still think it's probably pretty valid. I think something like when you survey Canadians, 90% of Canadians say they care about climate change. And then when you get the next question to them is, how much would you pay for climate change? And the average answer is like $100 a year. It is 100% of respondents was like below $300 a year. So that to me is an enormous mismatch of what it is going to take to stop climate change. I think that people realistically I haven't done the math on this, I'm just literally pulling numbers out from absolutely nowhere. Like, this is going to be, tens of thousands of dollars a customer if we really look at, and we like the luxuries that come along with moving goods and services. It's really nice to eat blueberries all year round. And Canada grows blueberries 1 month round. And so I think there's going to be a big customer reckoning here on what people are prepared to pay for. And then there's going to be a lot of innovation that's going to continue to have to happen, which is, I think, the more important place to put our energy. I think most of the consumer stuff, frankly, is greenwashing. It's like, oh, let's distract people here from doing something here. Like, you get out of your house, you heat your house, you eat food from all over the world, you go on trips, you use airplanes, you are actively contributing to climate change. And if people are too silly to figure that out, that's like, really, we got to be better educating consumers on what this really means. I think there's just a ton we can even do on low-hanging fruit. People waste a lot. We have very wasteful practices in everything from bottled water to all sorts of things that, like, if we really cared about climate change, we would just ban. Like, there's absolutely no reason to have bottled water when we have billions of dollars of infrastructure invested in healthy water that comes out of taps that tastes identical on blind taste tests, right? So I don't know. I think that maybe, part of me is I have both the background of being a technologist, but also growing up in an oil and gas family where, you can criticize resources for a long time, but you also have to be prepared to not heat your house if you really believe that industry is so evil. And then we need way more innovation. Like, it's going to take a lot of time, and it has continued to take a lot of time to figure out renewables, better things that we can use, and less wasteful practices. But that's maybe not the optimistic answer people were hoping for. I think it's the real answer, though.
Good. So we have got time for one more question. We got you for one more minute here. You touched briefly on your diversity stats. What would be your advice for a woman breaking into the finance industry or any industry that is historically not female dominated?
Yeah. Oh man, enjoy the ride. It's like, I have viewed this as only unidirectional, which is everyone notices me because I am different. And I think that is a huge advantage, not a huge disadvantage. I have been the only woman in the room on hundreds of pitch meetings. Hundreds. It's a true stat. That's not a made up stat. And Women can do absolutely anything. They can understand any industry. They have the exact same intellectual horsepower as men. They have way more confidence issues than men. And I don't spend a whole lot of time thinking about people that don't think I can do it. I also use this comparison all the time. I think this is a really helpful framework to use. So a lot of women complain to me that they are underestimated. So they're like, oh my God, Michelle, can you believe I went into a meeting and like someone thought I was a secretary? And like, I mean, if you don't think people have thought I was a secretary my whole life, I'm 5'4" and I'm tiny. Like no one thinks I'm anyone important if they don't know who I am. And they're like, oh, doesn't that suck? And like, wouldn't it be better if like everyone just like respected me? And I was like, well, first of all, you have to earn respect. No one exists in this world. There's no like auto respect button that we get as human beings. I mean, we should treat people civilly, but people don't have to believe you're smart or that you have a good opinion. You have to earn that. And the second is you're complaining to me about being underestimated. What if I was to give you the opposite, which is you have to spend your life being overestimated? Would you like that more? And they're like, oh yeah, no, I'd like that. I was like, but would you really like to be overestimated? Like, imagine right now you're Elon Musk. You've put a rocket into space. You're trying to fix one of the most broken, important social media platforms, and you're trying to reinvent electric cars. And like everyone is giving you a hard. They're like, you put a rocket into space, and people are like, that's not good enough. Imagine the enormous mental load that must take.
Yeah.
Most of us haven't launched rockets and then have the world tell us that wasn't good enough. And so I would prefer always to be underestimated versus overestimated. And so I think when you like boil it down, and then I also think there's a last thing here that's like, let's look at this on a relative basis. Like my grandmother had a graded education, and her options in life were to be a nurse, a school teacher, or a secretary. I know exactly what my genes feel like, and I would have been an absolutely terrible nurse, teacher, or secretary. I'm not designed to teach children how to read. Like I just don't have that much patience, and I'm good at lots of other things. And with my own children, I'll probably be different, but I couldn't do that at scale for 30 years. And so that's a pretty big difference to the opportunities I had 2 generations later. So I'm not here to complain. I just think it's one of those things where like, you embrace that you're different, you embrace that you're underestimated, and you work your ass off. And then there becomes a point where things get actually a lot easier in some ways, because there are so few women and people need women to do certain things, or there's so few of whatever this or that you happen to be a part of. But I've never viewed that as a negative. And I think that's been a huge part of my success.
I'm going to give you one last rapid fire question. Give you 30 seconds before we wrap up. Do you believe that immigrants coming to Canada are going to demand a fair wage for their skills? And will we see that change in terms of how they're currently compensated?
So this is a really good question that I just don't know enough about the dynamics of exactly that. Right now, are wages much lower, or are wages like what is typically happening here? Just give me a tiny bit more background.
I would believe that people think that they are undercompensated for their work that they do in Canada, that they are brought in to do hard labor, which many other Canadians don't feel they would do for the wage that is being paid.
Right. Will they start to demand that? I mean, this is a supply demand question, right? If Canada, it depends on what Canada does with immigration. I mean, they made a big announcement 2 weeks ago that they were letting in, that they wanted to let in 500,000 new immigrants. But it depends on the mix of those. So I know the construction industry has played a really big lobbying effort in making sure we got more skilled labor on the construction side, because, demands have been so different there. I think this is a great question for the government and a bad question for me, because if there is, it's like anything else, right? If there's a lot of supply, wage gets set very different. If there is, if everyone is demanding the same of very few people, then that really changes. So I don't know how that will play out. I think generally the country has tried to be open and even more open to skilled immigration, and even labor immigration. So let's see. I'm just not close enough to the issue. I wish I could give you a better answer, but those are what I track there.
Well, thank you very much for your time today, Michelle. Really appreciate it. And it was really great to have the chance to chat with you. So thank you very much.
Thank you for having me here. You guys provide just such an enormous value to the country. And I'm really grateful for that as well. So thank you.
And to our audience today, that wraps up our morning with you. I know there was a lot of useful information. Hopefully you were able to take one or two pieces of information away that resonated with yourself. When I think of JP's conversation with us, what sticks with me is plateaued borrowing costs, extended labor challenges, but also elevated commodity prices, which is going to help to strengthen the farm cash receipts, which for all of us in the room here today, it's a good news story. If our farmers are doing well, we're going to do well, and it's a good news story for our industry. So really excited to hear that from JP. And, you know, when I try to summarize all of the things that Michelle brought to us, 3 months and $10,000 really hit home for me. So not really that many roadblocks to trying out a new idea if you've got one, and being that genuine storyteller and failure. I work for an organization that talks a lot about being willing to fail and supporting us through that. And it can still be really tough to be in that mindset of failing to learn, although I know that that is what we all need to do to improve ourselves every day. So, terms of housekeeping and wrap up, we will be sharing a survey after this event, and we are asking you to fill it out. It provides valuable feedback for us to create these events going forward. Last year, we got feedback about the continuing education credits. We were able to implement that this year, so hopefully a lot of you are CCA members and can take advantage of that. This event is recorded. Please share it with your teammates. Reach out if you have any additional questions, and just want to say thank you again for being our partner, for helping us serve the industry, and enjoy the rest of your day.